Fox Business Alert, we are getting some breaking news. Reuters reports that Chinese AI lab DeepSeek has not shown U.S. chipmakers its upcoming flagship model for performance optimization. Sources say the lab did grant early access to domestic suppliers, including Huawei Technologies. Nvidia and AMD have declined to comment. DeepSeek and Huawei did not respond to requests for comments, but the move may be part of a broader strategy by the Chinese government to try to keep U.S. hardware and models disadvantaged in China. The development comes as a senior Trump administration official told Reuters DeepSeek's latest AI model was trained on Nvidia's most advanced chip right now, Blackwell, using a cluster in mainland China in a move that appears to violate U.S. export controls. So they want to use the chips that are made by Nvidia, but they don't want to share their AI platform with the rest of the world. Very interesting. All right, closing bell, 8 minutes away. We've got the markets in the green at the moment. Right now, the Dow is up 330 points, S&P better by 60, NASDAQ up 299, and the Russell 2000 up 11. Dow Transport's down 125 points, but the rest of them are at session highs right now. The chip sector may be part of what's sort of bumping them up here. It is flying higher. That's lifting the semiconductor index, the SOX, to a record high, powering up 1.6% to 8,469. Investors are piling into chips ahead of the big reveal. The world's most valuable company, Nvidia, is set to report fourth quarter earnings imminently. You don't want to miss my interview with Nvidia's CEO Jensen Huang tomorrow, 3 p.m. Eastern, right here on Fox Business. Let's look at Nvidia shares ahead of the big reveal. Right now, they're up 1.8% as we wait to hear what Jensen Huang has to say on the earnings call after the bell. Our countdown closer, Argent Capital portfolio manager Jed Ellerbroek, is watching it all. Jed, how important is this report when it comes to the whole market? Because everyone kind of leans on Nvidia.
Yeah, it's our Super Bowl. Comes along once a quarter. What makes this earnings release special, what makes Nvidia special, is it's the largest company in the world, and it's growing about 50% year over year. So that kind of size and growth, you don't see that combination very often. Of course, Nvidia's accelerated computing chips are powering this AI intelligence wave that we're all adopting in our personal lives and in our work lives. And we know they're going to report outstanding results. We know that they will beat their guidance provided 3 months ago, and I think most investors expect that they will issue guidance for next quarter that exceeds the consensus estimate. Something like $75 billion in revenue next quarter is probably a reasonable bogey to compare their guidance to.
It's like the output, the GDP of most medium countries. I'm looking at Netflix right now. The annual high, $134. Right now, it's at $82. Would you buy it here right now ahead of these earnings?
Netflix or Nvidia?
I'm sorry, Nvidia. Oh, hold up.
You're
Netflix.
Good.
Stand by. High of Netflix annually, 212, and right now it's at 196. Would you buy Nvidia right here?
Yeah, we would. Nvidia is a really large holding in our fund, and we really believe in the company. I think that valuation is reasonable. A lot of the companies that are also tied to this data center CapEx construction cycle trade at much higher valuations. So we think Nvidia is actually a reasonably priced stock in addition to all the fundamental outstanding aspects that Nvidia has. And Netflix doesn't look too bad right now either.
I was going to say, and what about Netflix? Netflix, while getting a little bit of a relief rally bump, who knows what's going to happen there, but we do have Paramount Skydance reporting earnings after the bell. Can't wait to hear what that conference call is like. In the meantime, I do want to just ask you, because it feels like Wall Street and Main Street, when it comes to Nvidia, are in the classic "what have you done for us lately" mode. The bar is so high, and the crown is so heavy upon the head that wears it, which would be Nvidia. It just must be a little disconcerting to see that even when a company comes in with a massive beat, it's not enough.
Yeah, I'm very curious to see the reaction tonight to Nvidia's earnings. I'm probably more interested to see the reaction than I am the numbers themselves. Investors, most fund managers are, struggle with, have trouble making Nvidia as large a position as it is in the S&P 500. Most the benchmark for most active managers and most index funds. So yeah, the company's so big, so dominant, growing so fast. I think investors don't quite know what to do with it.
Well, you know what to do with the $4 billion you have over at Argent Capital, and you've committed some of it to the heavy equipment rental companies. Tell us the names and what's kind of behind that thesis.
Yeah, we do like the equipment rental companies today. They're you can divide their business into two parts. One part, kind of small, local, non-residential construction projects. That part of their business has been weak for really 2 years now after interest rates rose in 2023 so steeply. That part of the business, I think, is hitting a trough and is set to improve starting in 2026 as interest rates have come down. The other part of their business are the mega projects, all the data center construction projects going on. Every hospital and airport around the country seems to be under construction. That part of the business has been doing well and will continue to do well. So I think all pistons are going to be firing here over the next 12 to 18 months for Herc and for United Rentals. And I think those businesses will do well.
Yeah, and there's always that opportunity to broaden a portfolio beyond the tech heaviness that many investors have been lured into. And that, I think, is starting to show when you look at, say, for example, the Russell 2000 year to date, it's up 7%, while the rest of them are up not even half of that. So tell me what you see for the entire market over the next couple of months.
Yeah, I think that we're seeing growth broaden out. I think that President Trump's tax bill is going to contribute to improved economic growth this year. Interest rates are falling. M&A activity is picking up. IPO activity, we think, is picking up. There are going to be some huge IPOs probably by the end of the year. And so I think there are a lot of things, helping to drive growth in our economy beyond just data center construction. And so, I think there are pretty good prospects, whether you look at the technology sector, which does remain the fastest growing sector in our stock market, but also industrials, financials, consumer discretionary stocks too.
Yeah, but volatility up 20% year to date. So clearly, it's a little bit of a rough road. Everybody's got to buckle up. It's great to have you. Thank you so much for joining us, Jed.
Have a great evening.